So today we had a day we were opened up and we open a kind of an opening drive, some call it lower. We just open up and find direction to the downside. So anybody trying to fight it long, generally, if they don't know what they're doing, doesn't mean, oh, they should be sure if they know what they're doing. No, you're picking good locations. When you're getting long, you could be wrong. You get your butt kicked without having to lose money. You just do it less and you're keeping a short leash on it. You're trying to be patient or disciplined and patient, maybe do less of it. So fading or fighting it doesn't have to be miserable. A lot of people who are bullish on a day like today come in and get killed because it went straight down after the open until it finally came up for breath. And what I want to teach people is it's okay to get your ass kicked and still maybe even be up money. You don't have to get your ass kicked and always lose money as the definition of it. It's just you're on the wrong side of the market, but you're great at picking locations and you're great at saying, hey, you know what? Too many longs in the market, too much competition, I'm out. So then look at the time where it was highlighted to get your best long opportunity. And remember, if I draw this back, we broke all morning from 47 three quarters on the open. We broke 10, 15 handles, which is a good move, slowly but surely. And we come into this gray zone. So the way we teach it, step one, what's your opinion? Step two, what's your level? Step three, what's your trigger moment to get you in? So a level is always a decent step two. It's a good step two if it's a good level. So Dave has this 31.33, which is some good support. I also had um, some old resistance, new support in at 31 and 32 myself. And so when the market gets into the zone, into the area, this is a 2 point area, what we want to see are people who aren't going to try to buy it with us and get long. Why? Because longs equal sellers. We want to see people who do the opposite and sell it and then say holy SHIT, because shorts, after you sell it, you're short, then you become a buyer. That's what you need for markets to go up and they're finally to be a bottom. So let's watch it as I fast forwarded into the zone right there. You're going to see this red just kick out, which on our OPP stands for other people's positions. Okay. Can't pause it. Stands for other people's positions. When it's red, people get short. When it's green, people get long. Now, if you look up in here, this is a scale up here of down in here. You could see me drawing it after I talk about it with the other cursor on the recording. But right up in here, I point because that's a scale and says not only is there a good short, but relative to the rest of the day, that's a pretty big open short position in context of the session. But we still got work to do. You got to get through all these longs. You want to see them file back, but you want to see these reds keep coming in. The point is if you're looking to qualify a good support level, and then you see, you have to know what you're looking for before you find it. And what you're looking for are shorts to come in and quickly say, you know what? And that's what you got right here. You got longs that puked. There weren't a ton of them, but longs puked, less longs, and new shorts that come in. We take the MBO data, filter it. We're able to disseminate with a really nice sample size of real open longs and open short positions. So you can see me illustrating live in real time what this all means. And we have our hourly, how many people are long versus how many people are short. That's this green bar in here. You want to see that decrease. You want to see this red stay in here. And if I fast forward it, the reds keep coming in, which is more shorts, which is what you want to see for upside. And then you want to see the longs kind of go away. So let's fast forward it and you see the red stay. If it gets a little green, here, it bumps in a bunch red. But as we go in, you could see it try to test to make lower lows. It gets above that red, it popped. Not a coincidence. So let me back it up. It gets above this cluster of reds. Now, this red that snuck out created this pop. These reds that snuck out created this next pop. And I'll fast forward it, and you can see them come in, pop right above it. And it's getting our hourly, the market's net long to now net short went red to green. I'm sorry, green to red. These are about 166, the way we scale it, longs minus shorts. But then that changed in here and helped create upsides the right side. And then you see this grow, which is for continuation. Ready, aim, fire, but using order flow in other people's positions. Remember, if you're not in our group, you're probably on our chart. And so let me back it up and show you. The market walks into this zone right in here, and then this red pops out right there. Pops out right there. Keep an eye where my cursor is. I'll rewind it and fast forward it. Pops out. Pops out. Pops out. What's that showing you? New shorts like little Johnny tells his mommy, Mommy, I didn't sell it at 47.75 after the open. I got long all the way down, but I got out. It was a big loser, but now I'm short. Now he's little Johnny's going to lose on that one too. Other people's position. Know who you're competing against.